investing in the stock market. You get in at the right time and you get out of the right time. At least that's what the conventional wisdom says. However, we see a lot of investors, especially in Sri Lanka, getting caught in the wrong side of these different waves and cycles of the market. If you are an investor, is this the right time to enter? What are these different terms that we hear about the stock market? And is it true that the stock market is going through a tough time? Hello and welcome to your weekend's most profitable and insightful 60 minutes. This is Bisnomics. I am Tharandu Amarasekara. Our focus today is on the investing in the stock exchange. What are the things that you need to know about? And most importantly, what are the recent developments? And today we will be in conversation with a very special guest. One would call him a market insight expert, someone who is conducting many online forums for the knowledge of investors and interested public, who is none other than Hasitha Leanage, who is the head of Capital Trust Research. Hasitha, welcome to Bisnomics, and despite your busy schedule, thank you so much for being here today.
Thanks for having me, Tharandu.
Hasitha, let's cut to the chase. Yes, the stock market was making headlines for all the right reasons a few months back, but all of a sudden we do hear about the downturn and the tough times. We hear the market shutting down in very few minutes, the values falling. Not so much of bloom and so much of gloom and doom is what we hear these days. What is the reason for the recent downturn in the stock market performance? Let's start with that.
Yeah, so just to give a brief, I'm sure as most of the viewers will know, last year we had a very good market. Market was operating in very good conditions. We had a more than 100% gain in the index. This year, obviously, the macroeconomic conditions took a turn for the worse. So breaking down the reasons what happened to the market, so we can look at around 5 reasons as to what caused the downturn. Starting off with in Jan, we made the $500 million bond payment. That resulted in dwindling of our foreign exchange reserves. And that created a bit of fear in terms of debt sustainability and debt default of the July payment. So as a result, the market dipped around 6 or 8% during that time frame. Then obviously, due to the lower reserves, there was a fuel shortage, gas shortage that affected the business confidence of sorts, investor confidence, the sentiment as well, because there were fears of business continuity, lower productivity, etc., having a negative impact on company earnings. So as a result of that, the market came down, I think, again around 6%, if I'm not mistaken, over a short time frame. Then what happened was basically, as you know, the currency was depreciated around I think to date is around 80%.
And in a very short time.
In a very short time. So that impacted in basically increasing cost of living and the increase in price of essentials, which created quite a bit of social unrest. With that, the general masses, general public was requesting political change. They were coming to the street, and that ended up with, in certain instances, for example, Mirihana, that led to a certain amount of violence. And then with the state of emergency, that really rocked the investor for confidence.
Yeah, because the market perception does depend a lot on the macroeconomic stability, and macroeconomic stability is very strongly connected with the political stability of a country. Am I right?
Exactly, for sure. Completely agree. So when there is political stability and macroeconomic stability, you can expect earnings, company earnings to do well, and that will be reflected in the market in general. So, but with this whole uncertainty and violence, that resulted in the market coming down by 23% over a very short period of time. So that's what was causing various triggers in the market. For example, the day after the Mirihana protests and violence, the market came down 9%. So there was a 5% trigger, then a 7.5% trigger, etc. So that was another reason. And then on top of that, there was the various power shortages, the load shedding and the power cuts. Initially started with 2 hours, then moved to 8 hours, then to 13 hours. So that again caused some anxiety across investors in terms of productivity and how companies are going to cope with manufacturing, etc., and what sort of impact it will have on earnings.
Correct.
So that was another factor. I think due to that, again, the market came down around 11 to 13%. But then what happened was, with the new central bank governor coming in, there was a big change on the monetary policy side. Interest rates, policy rates were increased by 700 basis points.
In fact, that's what we are coming into.
Yeah.
The interest rates.
Yeah.
Now, interest rates have been increased, massive boost in the interest rates, and also we are talking about the possibility of taxes being raised as well. Hasitha, how do you see these having an impact on the stock market performance?
So interest rates were raised on the 8th of April, if I'm not mistaken. So the market was closed from that. So the market didn't have really time to react to it. But once the new governor was appointed, the Treasury bill auction went up by 300 basis points. So because the market, the bond market, the T-bill market, the bond market was expecting interest rates to increase with the new governor coming in, because the whole point the governor trying to make was, okay, we need to really slow down the economy, cut down credit growth, cut down demand side inflation,
Correct.
cut down consumption, etc. So he increased interest rates. So the market couldn't really react to that initially. So we were closed for overdue. Then the SEC closed the market as well until there was some stability on multiple fronts. So when the market opened, the markets came down on a couple of consecutive days. So market came down by around 20%.
I think for the benefit of the viewers who are new to the stock market, Hasitha, at what point I think they call it the circuit break, if I'm not mistaken. At what point do they decide to close a market?
So when so there are two indexes. One is the all share price index, one is the S&P index. So initially, when it comes down 5%, a circuit breaker is triggered and the market closes. Then when it goes down 7.5%, again another circuit breaker is triggered and the market closes for another 30 minutes. So the first circuit breaker closed for 30 minutes, second circuit breaker closed for 30 minutes. Then at 10%, either index goes down 10%, then the third circuit breaker is triggered and then the market closes.
For the day.
For the day. So that happened. So then the market came down 20%. But when the market came down 20%, so within a very short period of time, I think since the market touched an all-time high on the 19th of January, if I'm not mistaken, the market had come down around 60%. So there was a bit of an overreaction, and it triggered margin calls, and the market was behaving in a very irrational manner.
What is a margin call, Hasitha?
So margin call is, okay, if you have a leveraged portfolio. So let's say your portfolio for 1 million rupees.
I mean, my collection of stocks.
Yes. Okay. You have a collection of stocks of 1 million rupees. You have the ability to borrow 50% of it. You can go to any bank that provides margin trading, or certain NBFIs or finance companies that provide
non-banking finance institutions, NBFIs.
Yes, that provide that. So you can go and borrow up to 50% of that value. So let's say in a downward trending market, the portfolio value, so if you had 1 million, then you borrowed for half a million. So you have 1.5 million. So if the market comes down by, let's say, 50%, as it did, then your total portfolio value is now 750,000. Okay, you have borrowed 500,000 here. Okay, so then the bank requires 1-to-1 collateral. Okay, as security. So here you borrowed 500,000, but your portfolio value is now only 750,000, whereas they want 1 million of collateral.
Yep.
Okay, so then they will sell your portfolio to bring it down to 1-to-1. Okay,
Understood.
so that triggers, so there's snowball effect. So when lower prices go, more you need to sell. Okay, so that triggered that margin calls. So as a result, the market kept coming down, but at a certain point, you can't expect stocks to go to zero. There's an intrinsic, there's a actual value, fair value for any stock
Correct.
that trading. So
But you're trading equity,
Yeah.
and the principles of accounting, the accounting standards do have a way of accounting for the actual value of a company, the equity of a company. It can never be, even though the confidence may be dropping, a company's value never really goes to zero.
Exactly,
And I believe
exactly.
most of our shares are in fact still undervalued to a large extent.
Exactly. So just going back to that, so what happened was when the market bottomed down, so then I think some of these most liquid stocks, the top 3 stocks in terms of market capitalization, for example, were trading at around 2 times earnings, annual earnings. Previously, they were trading at 15 times annual earnings. So you can imagine the drop that they experienced. So at one stage, astute value investors who are experienced will come in. And
Famous words of Warren Buffett, the best time to get into the market is when there is uncertainty on the streets.
Exactly. And within
There was actual uncertainty on the streets in Sri Lanka.
Exactly. So within a matter of days, because again, what I said with regards to the political uncertainty,
Correct.
within a matter of days, the market bounced back, and some of these stocks that were trading at 2 times PE went up close to 90 to 100% within a matter of days, 2 days. So for it to react in such a manner, there are a couple of reasons. So like the reasons I mentioned before, the 5 reasons why the market came down, if you look at each of those reasons, now in terms of debt default, Sri Lanka defaulting on its foreign debt, that has already been priced in. Sri Lanka went for a preemptive default.
Correct.
So that has been priced into the market. In terms of the power crisis, luckily the monsoon rains came early this year. The reservoirs are more than 50% full, if I'm not mistaken.
I think it was more than 66% at one point.
Exactly. And now we're generating around 30% of our power through hydro. So on top of that, we did secure the required coal that will last us until September. So in terms of the requirements as well, I think now we are less reliant on the diesels and various other thermal power. Obviously, coal will generate some sort of thermal power, but the reliance on these fuels is lower. So we are moving away from the 13-hour power cuts to 3-hour power cuts for now, example.
Correct.
So that
somewhat bearable.
Yeah, exactly, and that will have a minimal impact on productivity of various companies and won't have an impact on the bottom line as once feared.
Correct.
On top of that, on the political front as well, earlier when 42 members of the parliament moved away from the ruling party, moved on as an independent group, the market reacted very positively to that. It rallied 5%. Again, the day when the president announced they'll be forming a national government, that's what triggered the market rebound. So the market went up 6%.
Somewhat clear to say that the investor community has actually lost the confidence in the current government that is there, and they are hoping for something different.
Yes, so I think where they're coming from is the economic mismanagement of
the current government.
Of the current government, with the new appointments and going to the IMF, etc. Things are now looking much better than it was. So
it may be a painful journey, but at least there is some hope of a medicine.
Exactly. So that was one of the reasons. And in terms of the interest rates, which caused the biggest downturn of 21% or so. Now, even that, if you look at the last couple of Treasury bill and Treasury bond auctions, what has really happened? So after the policy rates were increased, the Treasury bill rate had increased to 24.36%, if I'm not mistaken, which is a significant jump. So just to give you some context, during the previous regime of the central bank, our T-bill rates were around 8.5%. So now it's 24%. That's a big increase.
And some of the large companies are offering their bills and commercial papers at 26-25%.
Exactly. So it's natural that a certain amount of money moved out of equities into
the
treasury bills and fixed income. But one thing that you need to keep in mind is you always need to look at real interest rates, right? So you take your face value, your nominal interest, for example, a T-bill is 24%, but now inflation you have your CCPI inflation measure, which is around 18.7%. Then you have another measure as well called the NCPI that takes whole of Sri Lanka's basket of goods and calculates it. So that's at 21.5%, right? So if you take your T-bill rate and of 24%, for example, you apply you need to pay your income taxes on that. So net of taxes, you're looking net of 18% tax, for example, you're looking at a effective rate of around 20% on your Treasury bills, right? So if you take your NCPI inflation index, 21 minus 20%, you're making negative return in negative real return on the fixed income securities.
Understood.
So your whatever savings is losing value in real terms.
Understood.
So in such an environment, investors look at asset classes that gives you that protection, right? So that's what. So even initial shock to the system, interest rates went up, money moved out. But when in the medium term, you realize your money is actually losing value in real terms, in rupee terms, as well as in dollar terms.
Absolutely.
Okay. So then you're looking at various other instruments that will provide you the protection, and equities is one.
One area. Yes.
So
some very good thoughts there, Hasitha. We are going to come back to you on more details on that. Buy, sell, or hold. What should be your decision? Let's talk about that on the other side of the short break. This is Bisnomics. Welcome back to Bisnomics, your weekend's most insightful and profitable 60 minutes. I'm Tharana Amarasekara. Our focus today is on the stock market of Sri Lanka, the current scenario and the way forward. And we are in conversation with Hasitha Leanage. Hasitha, in terms of the interest rate, what we were discussing just before the break, are we expecting it to remain this high because this is kind of at an all-time high for some of the instruments, or are we expecting a reduction or a little drop in the interest rate? Because that seems to be what the central bank is hinting in many of the recent business forums and meetings.
So basically, just going by some of the policy statements, some of the statements that the central bank governor has made, right? So as I was saying before, interest rates were, treasury bill rates were increased to around 24%. But in the last couple of auctions, the rates have been coming off. And yesterday there was a treasury bond auction where they were raising money, 3-year notes as well as 5-year notes.
So when you say that is on somewhere on the 27th or 28th of April?
No, sorry. Yesterday was, yes, correct.
Right. As at the point of our discussion.
Exactly. Sorry, yes. 27th of April. The rates were around 22% for 3 and 5-year bonds, whereas earlier the 1-year treasury bill was, if I'm not mistaken, around 24%. So now next week we'll see the rates coming down to around 22, like a 200 basis points reduction. So a reduction in interest rates should impact the equity markets in a positive manner. So when the interest rates went up, you saw the market coming down by 20%. So now when the interest rates does come down, you'll see the equity markets doing much better.
Absolutely.
But
because at the end of the day, the fundamental is that investors will always try to get as much as possible return at as less as possible risk.
Exactly.
So when your fixed income instruments are giving you a high interest rate, why take a chance with the stock market?
So again, when you're looking at high interest rates, right, you need to look at, as I mentioned before, your real interest rates. So even though the nominal interest rates goes up, doesn't necessarily mean money should flow out and stay out of assets like equity and stocks. So that is something to keep in mind.
Now, at one point of time, we were the best performing market, especially the darling of capital markets in the region. And it seems that foreign investors have also, as at now, it seems that they have kind of shied away from our market. These are, yes, unprecedented times for the Sri Lankan economy, true that, but how have other overseas markets reacted, especially to our things like debt default and accelerated depreciation of the rupee, high inflation? How have the foreign investors, but there was a time, Hasitha, where the foreign players were the main players in the market, but over the years we saw that the local investors got more involved. But amidst all these developments, the trio of forces, the debt default, the depreciation of the rupee and the high inflation, how are the foreign investors having their response towards our market?
So we'll just break that answer. Let me break that answer down to two aspects, right? So initial, because these are, as you mentioned, is unprecedented times for Sri Lanka. We've never experienced something like this in terms of such a in a macroeconomic sense, such circumstances.
With all due respect, even when there was a terrorism-related war that our tri-forces were fighting, even then things were not this bad.
Exactly. In terms of economic conditions, things weren't this bad. Inflation did go up previously in the early 2000s, in late 90s, early 2000s, where inflation went to around 25%. But we've never defaulted on our debt. So when you talk about debt default, there are a handful of countries that have done it. There are circumstances, and that really has a big impact on the whole financial system. So since we have no experience in that, we had to look at markets that have gone through the same sort of scenario. So one market that has reacted similar to what Sri Lanka has is Argentina, for example. So Argentina went through a debt default, went to IMF, borrowed money from IMF, and then they couldn't pay that money to IMF.
Okay.
Then what happened was you saw the currency depreciating around 60% initially. So when your currency depreciates 60%, that's going to have a big impact on your inflation, especially. So it's not consumption driven, it's basically a cost push inflation.
Correct.
So your cost of raw materials, what is imported, just goes higher and higher with the depreciation, right? So
Yes.
that initial shock to the system is hard to take. So then
Is that the shock that we are seeing now?
That's the shock we're seeing. Okay, so basically inflation goes increases. Then because of low foreign exchange reserves, you can't bring down basic essentials, right? Then there's, as a result, there are mass protests. Then you have political instability.
And what you are saying right now,
Yeah.
Hasitha, is what we see on the streets out there of the country as well.
Exactly. So this is the exact same thing that happened in Argentina. How did the Argentinian market react to that? So with the initial 63% depreciation, the markets came off around 30%, the equity market in Argentina. But then the policy rates were increased. If the rates were increased from 60% to 83%, if I'm not mistaken, in Argentina. Okay, so
16 to
60. They already had a high interest rate environment. It went to 80, I think, high of 83%, if I'm not mistaken. So when that happened, the markets came down by 29%. But then, even though, as I mentioned, when all the nominal interest rates were high, then the real interest rates started turning negative, because from 80 it went back down to 60, for example. So then the negative negative real interest was, the real interest was negative.
Correct.
Okay, so then money started moving back into equities, right? And at that point, interest rates were around 40 or 50%, but still it was negative real interest. So then money started moving back to equities. Then the market rebounded by 211%, if I remember right, over a short period of time. And that happened even though the currency continued to depreciate by 63%, and inflation was quite high at 40% or whatever. Okay, so that's something to keep in mind. So even though this is something new, yes, there's an initial shock, money will move out of the market, but then when you realize you have no other asset class to protect your wealth in terms of in real terms,
correct,
and even in USD terms, then you look
because
for,
even some of the asset classes like land, I mean, people have not really seen that as a valid movable or liquid investment asset.
Yes. So yeah, it lacks a liquidity, but later on, what I can, when we're looking at various sectors that are doing well in the market, we can touch upon that.
Absolutely.
But yes, so these are unprecedented times, and then going forward as well. Now with us going to IMF, okay, with the country deciding to go to IMF. So we have already floated the exchange, where the exchange had depreciated by 80%. We've already floated the interest rates, brought in market forces that will determine the interest rates as well. So next part of the reforms will be the debt restructuring, where in the process of appointing selecting the advisors that will negotiate with the bilateral, multilateral, and various other foreign lenders to reduce debt to GDP to around 80%. On top of that, what's the next shock that's going to come into the market is the increase in taxes. So I think
The dreaded one.
exactly, it's needed. As the finance minister said recently, we need to increase our tax to GDP from 8.6% to around 13 to 14% to ensure debt sustainability going forward. So that's going to come into play. So when these come in, there are going to be impacts on certain counters, certain stocks.
Correct.
So we need to navigate through that and then select stocks that will still provide you that protection, the required earnings growth that will be reflected in the share prices. So yes, with all these reforms, the market has come off, but taking a cue with the other markets, the index should go up in the future, providing that sort of investor appetite. But at the same time, you need to select stocks that will provide you a protection against all these reforms as well.
I'm coming into that topic of picking the right stocks. So what are the fundamental factors, Hasitha, that you would advise people to observe when they are picking stocks? And the three main moves you can make: you buy, you sell, you hold. As an investor, how do I make the decision what to hold, what to sell, and what to buy?
Okay, so I think you just look at bottom-up approach. To start off with the basic economy, what's your macroeconomic conditions, and see what are the sectors, what are the companies, what are the counters that can navigate through these reforms, as I mentioned. Okay, the biggest risk at the moment, increase in interest rate, that's going to reduce earnings if you have a lot of borrowings on your balance sheet, because your interest costs will go higher and higher. Then in terms, if you have quite a bit of raw materials that are imported, and you don't have a monopoly or you don't have a significant market share where you can't really pass on that cost increase, your margins are going to decline.
Correct.
Then on the positives, if you are an export-oriented company, or you have foreign operations that's generating
Dollar revenue.
then you're positively impacted. If you have companies with very large exposure to built-up real estate, both locally or even overseas, because built-up real estate acts as a hedge to inflation. For example, although, as I mentioned before, the official inflation figures of 18.7 or 21.5 is a basket of goods, right? But if you take building material, for example, which are all imported, mainly imported, prices have increased more than 100% in the last few months, right? So if you have a built-up real estate, a building, for example, or a house, that value, because the replacement value, if you're going to build it from scratch, is going to cost you more than double, right?
Yeah.
So in that context, there will be buyers who are looking to buy built-up real estate at prices less than the replacement value. Okay, so even companies that have exposure to built-up real estate will do well, and their net asset values will increase. So you need to look at different elements and see what are the companies positively impacted, what are companies negatively impacted.
Understood.
And then once you understand that, then you move on to company-specific indicators. You look at the PE ratios, for example.
Yeah.
Which is the price to earnings ratio.
I believe that's a comparison between the market price you are paying and the possible profits you can get per share.
Yes, per share.
Right. So if the PE ratio, for example, is more than 1, that means it's technically like a overvalued.
No.
How does it work?
No. So basically, if it's 1, it means the company is trading at 1 year's earnings. Okay. So let's say the company makes 100 million rupees. If the market capitalization is 100 million rupees, you're basically buying that whole company for 1 year's earnings.
Correct.
Okay, which is extremely undervalued. So previously, I think on 19th of January when the 9th of January when the market hit all-time high, our market was trading at a a price earnings ratio of around 15 times.
Okay, so 15 years.
Yeah, okay. Foreign markets are trading at much higher PEs, for example. India, I think it's in the 30s. So then
Is it a sign of the market being overly confident, or what is it?
no, so it's basically our market traded from the lows. I think during the COVID pandemic, when the markets opened, the markets crashed for a couple of days after it was open. The market PE came down to 8 times. Okay, but recently, before the market bounced on the 22nd or 23rd of April, the market PE came down to 6 times, okay, which is unprecedented. So last time it was 6 times was, I think, in the 2001 or early 2000s during the height of the war. So now I think as of the 28th, the market is trading at around a PE of around 6.95 or 7 times.
This is for the whole market.
Whole market,
Understood.
right?
Understood.
So then you have to look at stocks, okay, the multiples of these stocks, right, that you have identified that has good growth potential in this current macroeconomic condition.
Right.
So certain high growth counters where the earnings will keep growing, then you pay a higher price to earnings ratio.
Correct, where there's better potential.
Exactly, right. So you have to look at that. Then you also look at net asset values, for example, where if let's say the company has 200 million worth of assets, 100 million worth of borrowings, so the net asset value is 100 million. The market capitalization is 200 million, you're buying a company 2 times the net asset value, right. So, but if the company's market capitalization is only 50, okay, so then you're getting a big discount on your net asset value.
Correct.
Okay, so then there is it's mispriced. So then you look at these features, I mean these indicators, and then select what counters are attractively valued and what aren't. It's very important not to follow the herd mentality and just buy into stocks that are moving on.
Saying to buy.
That's everybody's saying to buy or going up based on rumors.
If you see that a share is undervalued, maybe it's a good thing to buy that now.
Exactly.
And,
exactly.
catch it at the bottom.
Exactly.
And then if you think something is too overvalued, you sell.
Yeah.
And if something is in between, you hold and see where it's heading.
Yeah. So so you understand. You look at foreign peers where they're trading at what sort of multiples.
Correct.
And then you decide whether that sector should be trading at a multiple of 8 or multiple of 10 or multiple of 5, for example.
Understood. Some very insightful thoughts there, Hasitha. Stay tuned. We will be back after this short break. This is Bisnomics. Welcome back to Bisnomics, your weekend's most insightful and profitable 60 minutes. Our focus today is on investing in the stock market and what do you need to know about the current situation. And our guest for today is none other than Mr. Hasitha Leanage. Hasitha, let's talk about investors getting into the market. We hear story after story about people, sometimes they mortgage their homes, they take massive loans, they even finance their car, and then they are putting their money into the stock market. Works well when everything is all bright and like when the sun is shining on you, but when it's the current scenario, when the markets are crashing, they are under lots of pressure and stress. What is your advice? What is the smart way to go about when it comes to investing in the stock market?
So as I touched upon earlier, it's always important to understand the fundamentals driving the stocks, right? So this downturn, for example, gave a very good once-in-a-lifetime entry point into the stock market. Certain stocks which had incredible growth potential, where it was providing you the protection against rupee depreciation, inflation, and providing you that exposure to dollarized assets and revenue, was trading at price to earnings ratios of around 2, which is unheard of. Global peers were trading at multiples of around 18, for example, right? So it's always important not to follow like a herd mentality.
Well, we see a lot of people selling, like buying shares when it's at the high and then selling off when it's coming down.
Exactly.
Doesn't make sense
Exactly.
to me.
Exactly. So you need to, when there's blood on the streets, it's very cliche, but when there's blood on the streets, it's a time to buy, right? So
But right now we are in a buying market.
exactly. Exactly. Valuation is still very attractive. The markets have bounced by increased by about 10% from the bottom, but it's still extremely attractively valued, right? So so you need to enter at the right time, and the point with leverage, where you're leveraging of your car or your house, your property, etc. It should be done if you're an experienced investor. You know exactly how the market dynamics work.
Correct. And you have enough reserves to keep you going during that time.
Exactly. And also, people should leverage not in a downward trending market. Okay, when there's an upward trending market, you can leverage and then manage your leverage efficiently as well. You can't be at the brink of 50, just because you can get a 50% facility, 50% of your portfolio value. You shouldn't be at that all the time, right? So you should leverage, let's say 10 to 20%, and then if the market does come down, you're not really pressured by the banks to sell. So it's very important to manage your leverage as well. And on top of that, it's always good to have your funding lines in place, and then in a time where market does stabilize and is attractively valued, then you draw upon that funding line and you utilize it. And when the market goes up, you can sell, book your profit accordingly.
When it comes to different sectors, now we talk about the logistics sector, the apparel sector, real estate sector. We don't have a lot of tech sectors so far in the market, but we do get these different sectors. Hospitality sector, another one. What are the, among these main dollar revenue earning sectors, what is the growth potential and how are they performing?
Okay. So the logistics space, for example, especially companies that have overseas operations, Sri Lankan companies that have gone global, that have global operations. So Sri Lanka, a very small portion of their total revenue. I think there are companies where they're now global conglomerates. Sri Lanka accounts for less than 5% of the total revenue.
Correct.
So that insulates, those companies insulates investors from the macroeconomic conditions in Sri Lanka, unfavorable macroeconomic conditions. Even if interest rates go up, it doesn't really impact their bottom line because their leverage, their borrowings are overseas. If the local taxes are increased, it doesn't really impact them. And by the rupee depreciating by 80%, and their revenue being overseas, 95% of the revenue being overseas, without any growth, their profitability is more or less increasing by 80%. So those companies benefit. So again, similar factors will impact the apparel sector as well.
In terms of the current situation, especially with regard to the hospitality sector, I just want to check with you on that. Do you see the hospitality sector stocks doing well, or is the Ukraine-Russia war having a negative impact on our hospitality sector?
The hospitality sector has gone through a tough time initially from the Easter tax, then COVID.
2 years of COVID.
2 years of COVID, and year before was the Easter tax as well, right? So the hospitality sector has got debt moratoriums since then for around 3 years now. So the debt component has increased more and more. And I think on the 31st of June, the hotels will be required to start servicing those loans. So the balance sheets will be quite leveraged. So we need to see the impact of that on the profitability. On top of that, yes, they are positively impacted in terms of the rupee depreciation because they're priced in dollars. So yes, in terms of rupee terms, the revenue should increase. Correct. But still,
with the power cuts and all these problems,
exactly.
The tourism has been hit badly.
Yeah, the occupancy levels are still not at a pre-pandemic level. So it will take some time for the hospitality and leisure sector to recover.
Understood.
At the moment, it's not too favorable.
In terms of the different assets which people are looking at, there are even people who talk about gold as an investment. Gold prices have been rising. I know you are an equity guy, but your thoughts on gold?
So, as I mentioned before, you have to look at various dollarized assets in this real estate, built up real estate, dollarized assets, or stocks that will provide you that dollarized exposure. So, gold is a dollarized asset, right? So, and in times of uncertainty, global gold prices go up. So, with the Russian-Ukraine conflict, gold prices shot up. And with the loads of money printing that's happening in the US, okay, commodity prices are going up accordingly.
They do it too.
Exactly. So
they print the dollars.
Exactly. So yes, so for those reasons.
And also, just to add now, after 2 years of the pandemic really ravaging through the country, India is expecting quite a lot of celebration seasons this year without the real negative impact of the pandemic, and we all know that India is a massive market for gold. Do you see that also having a positive impact on the gold market?
I'm not too familiar with the demand and supply of the gold market per se, but usually the gold prices track times of uncertainty. Right? In times of uncertainty, there is a positive movement in gold prices.
Understood. On a final note, what are the strategies that investors should follow given the current environment of Sri Lanka, especially with the rupee depreciating, very high inflation, and with inflation comes the problem of the values of savings going down, the real buying power of the savings are going down. How do you advise investment strategies to be adjusted in this situation?
So, initially touching upon our previous question, taking things from there. So, investors need some exposure to dollarized assets that will ensure wealth is preserved in dollar terms.
Correct.
Okay. So, at the moment, fixed income doesn't really do that. Your fixed deposit, let's say currently is 15%. If you have to pay income tax on that interest income as well, so then it's less than 15%. Inflation is in 20%, for example, 21%. So it doesn't really hold value even in rupee terms, for example, fixing the fixed deposits. Treasury bills, okay, at the moment it's negative or slightly or close to zero. So it doesn't really it protects it in rupee terms, but not in dollar terms given the depreciation. So you need some sort of asset that will provide you that protection against rupee depreciation. So that will, as I mentioned, gold is one, built up real estate is another. If you can't buy those assets directly, especially, okay, built up real estate is not liquid as you said before, gold is liquid, but built up real estate is not as liquid. So then your only other option is buying certain equities,
which are from
certain companies that provide you that. Okay, so you can look at dollar earning companies that have foreign operations that's not going to be impacted by higher taxes here, higher interest here, as well as companies that already own the real estate, built up real estate. So their net asset values will keep increasing when those assets get revalued each year.
Makes sense. Hasitha, I must ask you this. In fact, this is something that just came up to my mind. We do hear of a lot of scams which are operating in Sri Lanka. People get phone calls saying you can invest in these foreign companies, invest in Apple with us and Google with us and so on. But most of these then later turn out to be real fraudulent operations, and they go silent for a while and then again come up. I've got calls like that so many times. Somebody has given them the wrong information that I have money. But what I'm trying to tell you is, how can people be alert to these, and how can one safeguard themselves from these scams? Because at the end of the day, when people get scammed, they lose confidence in the whole market. To your knowledge, are there possibilities for Sri Lankans to invest in these foreign markets? And number two, how can one safeguard themselves from the scams? Where can they go for information? Give some insight on that.
So at the moment, Sri Lankans are not allowed to invest in overseas markets. Pre-COVID, before these various restrictions came on foreign exchange, you are allowed to invest up to $150,000, if I'm not mistaken, in foreign equities or real estate, etc. So there were a few legitimate entities that were set up to facilitate that.
Yes.
But at the moment, that's not possible.
Understood.
So if you do get a call of that nature,
High chance
in this environment, it is more likely a
scam
fraudulent
operation.
But once these restrictions are lifted, there are legitimate companies that provide that service. So you need to evaluate each company that provides that service, check their track record, and then follow through with it.
And how can one safeguard themselves from the general scams happening? Can they go to the CSE website, SEC website? What are the options available?
So the options available is, okay, there are quite a few trading partners, stockbrokers, for example, that have good research teams.
Correct.
So if certain investors aren't too financially literate or doesn't understand how to select companies, it's best to speak to your stockbroker, look at their research. Nowadays, you can start learning everything online, right? You can start with researching, and then you start to understand about companies, how they trade, and then get various material from the research.
Knowledge and awareness is the best way to defend themselves
Exactly.
from these scams.
Exactly.
Hasitha, Leanage, absolute pleasure having you with us today. You covered on a plethora of topics, definitely one of the most insightful conversations we have had at Bisnomics. Once again, thank you for joining us, and wish you, as well as the investors of the country and our stock market, all the best to keep booming and take things in the right direction. Thank you for joining us.
Thanks for having me, Tavendu. Absolute pleasure.
No matter what business you may be in, if you are an investor, I'm sure today's discussion would help you to make the right decision to either to buy, to hold, or to sell your stocks. What factors to look at, and most importantly, the current impact from the current macroeconomic and political uncertainties, and what we can expect into the future. These insights would help you to make smart decisions and make sure that the week ahead is a profitable one for you. I'm Tharandu Amarasekara, and I will see you with the next episode. This is Bisnomics.